morning, everybody. Welcome to the game plan. It's that time on this Friday morning, 9 a.m. sharp. I am live here from Verified Investing Studios, and we're going to get into the charts. So first and foremost, we're looking at a market that continues to look like it wants to float up. We may even be touching all-time highs on the S&P by early next week. And again, I'm going to go over a chart that actually predicts that if we do hit new all-time highs, it actually may be the precursor to a major market move down per previous charts of major cycles in the past. So we're going to get into that as well. So let's get right into the charts here, see how things go. And number one, we're going to flip right into the S&P 500. So this is your pre-market data. Right now, this is where we closed yesterday on the charts. This was after hours yesterday, and this is this morning. You could see early in the morning, before many of us were awake, what did we see? We saw a pretty dramatic move up. Not much volume there, though. Keep that in mind, is that this is the period when there's almost no volume in the market, so the institutions have a great advantage to just pushing it up on very little money, and then ultimately they can try to unload into the retail buyer once the market opens. Now, we have come back in just a little bit, but we're still net positive on the morning session. All right, so again, first things first, I want to go over this chart of the daily SPY. And again, this was yesterday's candle. So here's yesterday's move. This was your 786 and gap fill level. So once you get above the 786 Fibonacci level, there's really no further levels until you get to double top. And so what this tells us is that, yes, we're above, and I mean, there's always a chance we could reverse quickly today, but it's not looking likely. But really, at this point, we're less than 1% from all-time highs on the S&P 500. So what you have to assume is we're going to at least touch the double top. Now, historically, when you go up here and there's this much bullish sentiment, you have a lot of people with stops right above that level. They're going to want to run those stops. They're going to want to take those shorts out, pushing as many people to the long side and getting as many shorts out of the way as possible. So the idea here is, if we look at these charts, and I want to just kind of go over this and kind of clean this up, the concept is probabilities are now favoring a potential move up to new all-time highs by just a hair. So essentially you get this M chart pattern. Okay, and I'll go over this, and again, coming up here, here's your double top right here. So you go just above it, enough to get maximum people bullish, thinking here we go again, the next big move is coming, and then my guess is we're going to see that reversal back to the downside and the dramatic decline. Notice this pattern. Classic M pattern in technical analysis. You have a pivot high here. The second high is usually the higher high, which gets the max people bullish, takes out the max amount of bears. And then off of this pattern, oftentimes you get the biggest down moves out there. And just to prove my point, we can go over two major cycle highs in various things. We're going to go over one in commodities and one in crypto to kind of point out this move. So if we look at cryptocurrency here, if we go to Bitcoin, right? In fact, I have it over here on the Bitcoin chart. This is exactly what happened to Bitcoin. So in 2021, we had this massive move up, just like we've seen, and then we had this corrective move, right? We then charged right back up, and what ended up happening? We took out the previous all-time highs by about a few percentage points. I think it was about 5% or 4%, getting maximum amount of bulls on board, thinking that this was the next move up. And I remember this distinctively because I was at the Dubai conference for crypto, and I was actually the only one there saying, guys, be careful, we're going to go back to 20,000. Sure enough, we did. But ultimately, that top right there lured in the maximum amount of bulls, people calling for 100K by the end of November. It was the beginning of November, and by the end, they were saying 100K and even a million. You saw lots of millions calls. And then what ended up happening? We ended up coming down 77%, right? So you dropped about 77% from that high. Now, again, all right, so one chart. Now, you might say, by the way, why is this important? Like, why is this pattern going to replicate? Or why does it replicate? And in technical analysis, when you're trading, the reason why technical analysis is a probability factor that works is because human nature is what makes buyers and sellers do what they do, right? If you're excited about something, you want to buy it. If you're greedy, you want to buy it. If you're getting the FOMO, you want to buy it. It's human emotion coming into play. Likewise, on the sell side, the panic and the fear drives people to sell. And so when you're trading charts, what you're doing is you're trading human emotion. And human emotion, what we know is you go back 1,000 years, 5,000 years. Human emotion doesn't change. Greed and fear are still there, and you can look in various old texts at greed and fear out there. And so it tends to repeat over and over again, which is why technical analysis does work a majority of the time. And when I say that, I remind everyone, nothing's 100%. Certainly technical analysis is it gives you probabilities. So anyways, going on to the next chart here, let's go to natural gas. Now, natural gas in 2022 had a very similar chart pattern, right? Look at this move to the upside. Look at this down move. Secondary move. Look, the high, higher high, and then we got this drop. And actually, natural gas dropped, I believe it was 85% from that high. Now, I want to be clear. By no means am I calling for a corrective move on the S&P of that magnitude. If that happens, we're all screwed. Let's be fair, right? But I do think that it ultimately will lead to a decline, especially with what I'm seeing in the macro data. The macro data continues to weaken. We talked about this yesterday. Jobless claims north of 230,000 now. That's now a breakout on jobless claims, likely going to continue up. We saw the GDP numbers come in weaker. We saw the non-farm payrolls numbers come in weaker. ISM is showing a contraction for services. All of these data points are showing an economy that is dropping. Now, in the short term, you might say, well, if the economy is declining, why is the stock market going back up? Because the market is addicted to the idea that a weakening economy is good news for the stock market via interest rates going down. Again, that will work for a certain amount of time. Eventually, what's going to happen is when the Fed starts to cut rates, believe it or not, historically, the markets then start to decline. So we can actually almost pinpoint it to when the Fed actually starts cutting rates. Now, you may say, why? Well, number one, the markets are already factoring in rate cuts, right? We're now back to 2 rate cuts this year alone being factored in. Number two, the market and investors, once the Fed has to cut, there's something wrong, right? There's something wrong. And the market and investors start to freak out and say, oh my gosh, you know, the Fed is behind the curve. How many times have we heard that on inflation on the way up, right? On inflation's up move, the Fed is behind the curve. Well, now people are going to say, oh my gosh, the Fed is behind the curve as the economy crumbles. And that's going to be the kicker for the decline in the markets. All right, so just wanted to go over that real quick, guys. We're going to quickly go to Taiwan Semi. Taiwan Semi coming out overnight and saying that their sales for in the last month have been very, very solid, better than expected. Taiwan Semi, again, they're talking AI, which again is helping the whole semiconductor index. We hit a high of about 148.50 this morning, trading around 147. If we go to the daily chart, the level that I'm looking for, there's 2 levels that I'm going to eye as a tradable level today. One is going to be this first trend line here, which is around 154. So 154, and then it looks like 158.50. Yeah, let me just check. Might be 159. No, 158.80. So 158.80. So this area, you have the opening pivot here, and then your double top right up here on Taiwan Semi. Granted, we have to get a decent move up from 147 to get there, but nonetheless, if it does make that move, I will be looking to trade that in the Apex Live Day Trading Room with our other members in there. Okay, so that's good stuff right there, guys. Just wanted to cover that. By default, Nvidia is catching a bid today. Nvidia was down about $17 yesterday. It's up about $12 today. So you are seeing that move. Because Taiwan Semi said sales were good, AI chip demand is amazing, then by default, you're seeing a lot of the other semiconductors make moves to the upside. All right, so just a couple tidbits on that front. Other than that, markets are relatively quiet today. Again, we're through a majority of earnings season, so the crazy moves are not going to be there unless we get economic data in the morning or specific, relative chart information on specific stocks. But I will say this, next week, there's a massive amount of economic data, and it's going to be wild, okay? All right, guys, what we're going to do now is we're going to do our drawing real quick to find out who the winner is here. So what we're going to do, again, yesterday was Range Trading Mastery, an amazing course by Paul Sampson, one of our verified pros here. And we're going to find out who wins today that course and basically who will be improving their ability to trade the markets. Crypto mainly, but again, it works on all different things as well. So the winner today, guys, is Anand Thakur, and I could be pronouncing that incorrectly, 1633. Reach out to Lawton at verifiedinvesting.com. He will hook you up with this course. And again, it's a great course, amazing course. Check it out on our website underneath all of our courses, folks. They are great. And again, if there's one thing if I could go back and redo something in my life, it would be to get more educated early in my career. I would be 100 times wealthier, right? Because again, think about the amount of money that I lost early in my career. And then if I didn't lose that or I lost less, the exponential growth on that as I've become a better trader would be incredible. But again, when I was a youngin', I didn't know any better. I just was like, hey, let me get in this. And I made every mistake in the book, folks. Every mistake. I FOMO'd in. I did stupid things. I put all my money in a position. I mean, all the things that I look back and I'm just like, man, what were you thinking? But honestly, it was a learning environment that I had to go through to get where I am today. I'm hopeful that these game plans, as well as our courses, help a lot of you guys avoid those pitfalls and honestly save a lot of money over the course of your lives. Okay, let's do our drawing here real quick, or I'll spin of the wheel. We'll find out what it is for Monday. Let's see what, again, we can do here. The 1 minute scalpel, guys. Another amazing course. This one by Dr. B. His 1 minute scalpel is incredible, folks. Literally, I was running my live trading room, just to give you some background on this, since 2007, where we were day trading. We were making money. He's come in with his tactics for the 1 minute scalpel and revolutionized it. You can ask anyone in the Apex live day trading room. It has made that trading room 5x better in terms of profitability and trading opportunities. Very cool. And this is what he uses right here. So amazing stuff. We'll do that drawing on Monday. All right, let's go right over here, guys. We're going to run right through. We're going to look at Bitcoin and some other cryptos. And then ultimately what we're going to do is go over a couple other commodities as well. So first and foremost, Bitcoin not doing much today. It's had a little bit of an uptick early and has just kind of settled into the flat side here. Generally speaking, we're still within a range, right? One of the things we can see is that we have our support line down here. And again, let me get off that color there. There we go. So our support line down here and our resistance line up here. Now, we are favoring the lower end of support, but one of the things that I want to make clear to you guys is that in general, this bigger pattern is actually bullish, right? Now, listen, that's more, it's still got to break out and it still could fail. But when you have this move up, what type of pattern formation is that? It's a bullish pattern, right? You have the upside move and then the sideways consolidation, which is really what's going on here. And so net, as long as this holds here, this lower trend line, and you don't confirm below, the bias, honestly, is probably to the upside on Bitcoin. Speaking of upside, I did last night pick up a new trade with members of Smart Money Crypto, and this thing is just rocketing already, guys. Take a look at this. This is INJ, and again, number one, you could see this was a level, and I actually highlighted this like a few months ago. I said, guys, when this level breaks, watch out below. It's going to collapse, and it sure did. It went down to like 16 bucks. It's been consolidating here, and I'll show you why last night. I wasn't planning to do this trade, and then all of a sudden I was doing research. I was in bed on my laptop looking at charts, as I always do, and lo and behold, I'm like, wait a minute. What's this trend line here? Did we get a breakout and a retrace to the scene of the crime? Let me show you this. Look at this. See this line here? So basically what you had is you had a pivot to pivot to pivot and to pivot, and look, you broke above it, and then you consolidated back down. I was like, all right. Low risk, you have the support line right here, you have double bottom right there, and sure enough, up to the races. So we got in this below 24 bucks last night, already north of 26.50. Awesome little opportunity. But these are the things, this is why I love charts, is because it gives me the ability to potentially find like a diamond in the rough, if you will, or a needle in a haystack. You could use any analogies you want, but it's like, this is why what I live for, is the ability to find something that's like a hidden gem and be like, holy cow, and then make money on it, like very quickly. Very, very cool. Okay. Gold's chart, guys. Gold is up a little bit today. Assuming it closes here, the bias would be neutral on gold. Why is it neutral? Well, number one, we've now eclipsed, assuming we close here, we've eclipsed this bear flag high. So that now negates that bear flag, but you still have the topping tail here, which is a negative. So we have a positive move negating this downward drop, but now a negative, those cancel each other out, and essentially you have a neutral bias on it. If we get above the topping tail high and close, then that negates the one bearish signal, and it's full out back to bullish. And honestly, you're still heading for 2,500 this year, probably even above 2,500. Silver had a nice move yesterday, although it is pulling back after an initial pop today. We can see again, same sort of thing. It got above this level, so that essentially makes it neutral. Still the topping tail here is the dominant factor there. And again, those cancel each other out. The positive move and the negative topping tail cancel each other out. So we'd watch that. By the way, one thing I want you guys to watch for, going back to gold's chart here. if we look at gold, there is an obvious level for us to watch. So number one, we would watch this trend line here, because if this trend line breaks to the downside, let me zoom in a little so we can actually get this even clearer for you guys. All right, so see this trend line, this upsloping trend line I just put in, basically going back to this area here, to here, right through these lows right here. So essentially, as long as you stay above that, that keeps you in that neutral, maybe even positive bias if we take this out. If this line, if price breaks below this line, it should go to that 2200 target that I've been isolating. So just something to watch. Watch this level. It's around $2,325 right here. That would be a level to watch. If gold turns down and you break that level, then the likely move would be to 2200. By the way, next week should be very interesting for the metals because you do have a lot of economic data that's going to influence the US dollar and currencies, and by default, it'll influence the commodities. Okay, got to look at this, guys. This morning I wrote an article on verified investing. You can go find it. Literally, it was probably about 6:30 in the morning I put this up. I talked about a major level being tagged, the underbelly of it on copper. Now you've reversed copper. This could be a topping tail on copper, guys. All right, so again, watch this closely. Now you may say, well, what does that matter to me? Well, to be honest, even if you can't trade copper, there's so many opportunities. There's so many stocks, there's ETFs that trade off of copper. There is opportunities out there to make money off of this. And again, the key is going to be, how does this candle end today? Right now it is a topping tail currently, but we still have a lot of time left in the day. But again, for me, I think in the bigger picture, and I say to myself, okay, well, if the economy is slowing, that's not good for copper. Copper's had a ridiculous run, so it's overbought, which means it's due for a correction. Now the pattern, the factors are falling into place with the economic data starting to weaken, and that ultimately may, if we get a topping tail here, guys, this is probably donezo here, and you'll see this move to the downside in copper. Where would it go? The likely target would be right here. That's your pivot support, right around 415, 420, somewhere in that vicinity. All right. Quickly going into oil, guys. Oil continues to inch up off of technical support. Here we have it. Let's bring up that chart. There we go for oil. Again, oil came into this amazing trend line here, as we know, right here to here to here, right into this zone, and we are bouncing. Now, what I'm looking for is I'm looking for a short on oil, but not just blindly short, right? We never blindly do anything. There has to be factors behind it. And the factor here is going to be this head and shoulder pattern, a retrace to the neckline. So you connect that neckline right here, and if price can go up into this level, it's around 81 to 82, then this should be major resistance, which then I think triggers a bigger down move. So that's something I'm watching for on oil here. Again, I will alert, obviously, my commodity, Smart Money commodity members. If it gets there, I'll take that trade with them. All right, lastly, natural gas, guys. Natural gas had another up move yesterday. I actually isolated down a level to go short. I haven't gone short yet because it hasn't tagged, but I do want to show you guys this. There's a big level, and again, I'm going to have to do this on my chart because it's going back too far, but basically it's just above 250. It's this pivot point right here, if we draw this through. So what we can see here is this is a good trend line of resistance. You have this pivot low right here, right here, and right here, all in alignment right there. And that means that likely we're getting extended. If we get into here, I would actually probably nibble on a short on natural gas. Now, is that dangerous? Yeah. I mean, any trade in natural gas, they call it a widowmaker for a reason, so that you have to be careful. But the point being is that one thing I want to show you guys, remember how just a few days ago I was like, oh, well, if it pulls back to here, we're going to buy it. And now I'm saying, oh, but if it goes up here, we're going to short it. That's what a trader does. I couldn't care less. This could be rocks. Like I could be trading a chart of rocks or any commodity or any stock or any crypto. It doesn't matter. I have no preconceived bias. All I care about is, does it hit resistance, in which case I go short? Does it hit support? Well, then I go long. That's all you care about. That's what a trader, to be honest, that makes you much freer because you don't get like hooked into these stocks like, oh my God, I just love Tesla because Elon Musk's got it, or whatever it is. You know, for the most part, you want to be agnostic and you just let the charts tell you what to do. And that's why sometimes if it goes high enough, I'm going to short it. Sometimes it goes low enough, I'm going to buy it. That's just what I'm going to do. All right, guys, so on that note, we're going to call it today. It's a little bit of a shorter one, but I'm happy about that because it's Friday, and I am a little tired. I'm not going to lie to you guys. You can imagine how much craziness is going on here at the Verified Investing Studios. Don't forget, if you want to be a sponsor and you want to be on the Wheel of Appreciation, reach out to Lawton at Verified Investing as well. We'll get you on there. But thank you guys for tuning in. Another amazing week with you guys. Thank you again for supporting us here at Verified Investing and learning with us, and again, achieving hopefully a better level of financial success. You guys take care.